Hello, everyone. Good morning and good afternoon. Thank you for joining us today on this webinar, How Consumer Direct Lenders Do Purchase Transactions. Our speakers today are Josh Friend and Grant Moon, and I'll let them introduce themselves a little later on. But first, I want to cover a few housekeeping items. The webinar today is being recorded, so everyone will get a copy of that following the presentation. Also, if you have any questions, feel free to drop them into the Q&A box. And we will get to them at the end of the presentation. So without further ado, Josh is going to take it away for about 20 minutes and then pass it off to Grant to close us out.
Hello, everyone. I'm actually really excited to be doing this today. I know this is something that a lot of lenders have been looking at, especially as the market's been changing. So this is a really good webinar to be part of. We should have some pretty good blocking and tackling, some steps you can take to make it successful. You know, in short, I know a handful of years ago, I was talking to a handful of vendors, and they referred to doing purchase transactions in a call center as what they call the holy grail. That if you could master that process, you know, that your mortgage company would definitely have a long-term income stream. And there's obviously a lot of drivers to that, but you know, most importantly, I think, you know, the biggest drivers of that have been our consumers, what our consumers are asking for. That's really what we have to respond to, is what do borrowers want, and how do we as lenders give them what they want. And no time has it been ever so changing as right now with the digital mortgage, with consumers going online. Just the market's, you know, completely changed over the last, you know, 20 years. Give you an example of really think about what the market once was. Right, take a look at how purchase transactions took place for years and years and years. The real estate agent was really the keeper of the kingdom. You didn't have access to homes. If you wanted to see what a house looked like or what was for sale, you called a real estate agent. They picked you up in their car. They handed you a list of homes that were for sale. They gave you a bunch of flyers, and they really kind of managed that transaction. Well, as we all know, the market's really been changing. No longer do you have to get a real estate agent to find a house. Now you can go online and find your home yourself. So the market today has really, really changed. And how much has it changed? To give you a great example of how much it's changed is, this is a stat from Zillow. This is actually a slide from Zillow as well. So what Zillow has found now is, based off of their consumers, when they go online and they look for a house, and they start a real estate transaction to buy a home, 77% of the time, the consumer goes to one of their websites, interacts with the website to start a real estate transaction. They ask for a lender before they ask for a real estate agent. And that's huge, right? So now your consumers are saying, I know the power of being pre-approved or knowing what I can afford is as valuable or more valuable than it is to go talk to a real estate agent. And that's where the transaction is really changing. And to understand how that has changed is how you can make consumer direct purchases successful. And that's really what it comes down to, is how do you take advantage of that? Consumer direct lending and purchase market has grown to about 30% according to Strathmore Group. So it is a growing, it was just a handful of years ago, only 10% in the marketplace. So it is growing readily inside the market. And understand that transaction of saying, I'm a buyer, I'm looking for a house, I know I need to get a loan first. And one of the challenges has always been, for a lot of lenders, especially people that are working in a call center consumer direct space, is a purchase transaction has been somewhat elusive. Because, I mean, I was a loan officer in 1999. I stopped being a loan officer in 2002. And I remember when I would get a phone call, and I was in the consumer direct shop, I worked at IndyMac Bank. If I got a phone call and I was talking to a borrower, it was an internet lead, and they said, hey, I'm looking to buy a house. My first question was, have you found a house? Do you know what house you're buying, and do you have a contract? And if the answer was, no, I haven't found the house, or I don't have a contract, and I don't have a real estate agent, what I would say to them was, well, here's my number. You give me a call when you find a house. And I didn't want to work that transaction because in my book, there wasn't a value there because I couldn't close that right away. Well, that's kind of the shift. What we're finding now, that person who hasn't found a house, who hasn't found a real estate agent, and doesn't have a contract is really your most valuable lead source when it comes to consumer direct purchase transactions. And it's really to understand how it works. So a couple things as lenders have to understand, and I'm going to give you a couple points here before we get to some of the call strategy about making purchase work in consumer direct call centers. Step number one, it takes time to build your pipeline. So if you're a marketer and you're spending money, you're buying internet leads, you're sending out direct mail, you're using transfer companies, you realize that if you buy transfers today, you're going to get a return on capital in say 60 to 70 days. Those loans that 80% of those loans that you're going to fund from that lead source, you'll fund in the next 60 days, let's say. So it's a pretty quick turn of capital, and it's easier to build a pipeline knowing that. What we have found in the purchase side, it's going to be like 9 months to a year to really get a return on your investment on those same marketing dollars spent. So first and foremost, as a lender, you're looking at this, you need to step into this thinking it's a longer play than it was for a refinance transaction. So it's going to take you more capital, it will, and it'll take you more time to get there. But the great news is once you have that pipeline built, then you have, just like you're in a refinance transaction, then you have a consistent deal flow. So one thing to really look in this when you're looking at getting in the space, understand that capital investment is higher than it is for a refinance market. It's just the way it works. Second thing is what we found is you really should be specializing your loan officers. It's hard for loan officers to be working a purchase transaction and refinance transactions at the same time with the same effectiveness. Because again, if I'm a loan officer, I have 6 loans I could be selling right now. 4 of them are refinances that I could close in 30 days. And 2 of them are long-term potential sales of a house. We all know where my efforts typically going to go to. It's going to go to where the money's closest. So it's hard for loan officers to handle both transactions and be able to see the long view if they have short-term money in front of them. So step one, understand it's going to take you more money than typical refinance transactions do. 2, you're going to need to really specialize as loan officers. What I mean by that, have loan officers that just do purchase transactions. It's hard to have them do both. Some lenders I've seen it done somewhat effectively, but for the most part, to be most effective, you really want to specialize your loan officers. And then thirdly is you really need to understand the metrics for success and the call strategy and the process strategy of what that looks like. So here's kind of what we have found as the best process when we have seen work in many lenders. Now, this process, as I walk through it, this isn't a new process. This is actually something that some of you guys may remember Nation Point. They were around, I think they closed down maybe 2008 when the market crashed. It was one of Bill Dallas's companies. They were doing about 1,000 or more purchase transactions a month, and that was back in 2004, 2005, 2006, all through a call center. And they were, that was still to this day. A lot of lenders have not really copied that model. I happen to have been friends with some of the team that ran the company there, so I got a lot of insight in what they did. And we've also helped lenders do the same thing. I myself as a lender in the past did the same process and got the same results. So here's what we found is the best way to really go into the first transaction and really where you make your money. Step one is what we once thought was not valuable is valuable. That consumer that does not have a real estate agent, that does not have a house, typically is your most valuable lead source. So the transaction works this way. I'm talking to you as a consumer, and you haven't found a house, you haven't had a real estate agent. My first sales step I want to get you pre-approved, right? So this is how you teach your sales staff. It's get people pre-approved and you get them connected to real estate agents. But step one is I need to get you pre-approved. Now, a lot of lenders, what we've seen that works effectively is don't just have a pre-qualification process. Build some type of true pre-approval, buyer ready, something that says more to the real estate agent, to the borrower that, hey, this person has actually had more stuff done. And what I mean by that is this. What we see most effective is you actually ask for W-2s, pay stubs, bank statements. You sell to the consumer, I'm going to go ahead and get you approved for a loan. We're going to have an underwriter look at your transaction. We're going to give you a buyer-ready package that says you're ready to go buy a house. We've seen the appraisal and title report, basically. And you're ready to go shop. So the transaction works, get them pre-approved. The next step, which is very important here, is connect them to a real estate agent, right? So the process is get them pre-approved and then get them shopping. And the transaction really works well when you have a managed network, which is why I'm really excited to have Home Capital on here, because that's a very integral part of this. If you get these people pre-approved, you want them shopping with a real estate agent. But if you just send them out to any real estate agent in the world, you and I both know there's a good possibility that real estate agent's going to say, hey, why don't you go talk to my buddy about a loan? And you don't want that to happen because you don't want to be getting people pre-approved, tell them they can go buy, and then you lose the transaction, right? Most consumers that don't own homes today, if you went out there and you made, I'm convinced if you made everyone an offer, told everyone who doesn't own a home, the ones that could qualify, and said, if you go sign paperwork tomorrow, you can buy a house, you'd have a lot of people that go buy houses tomorrow. A lot of consumers are scared, they don't know the process, so this is really a service game here. So the service of getting someone pre-approved, explaining the process to them, connect them to a real estate agent and saying, here's a real estate agent that can work with you. This agent will walk you through the process and you forward on a pre-approval. That's service. Now you have a buyer out there shopping. I remember years ago when I first did this in my first call center, we rolled this out on a Wednesday. It was a new campaign. I remember on a Friday afternoon, we had a loan officer, Allison. Allison took a call, talked to a consumer. The consumer said they hadn't found the house. They just started the process. They were just looking, they wanted to start looking. And that same day, we got it pre-approved. They sent in their paperwork, went to an underwriter. We got them buyer ready. We connected to a real estate agent that same day. All took one afternoon transaction. By Saturday morning at 11 a.m., we had a contract. So we gave them a pre-approval on Friday, talked to them Friday, connected with the real estate agent on Friday. Saturday morning, that real estate agent took them in a car, drove around. They found a house. It got accepted. We had a contract by 11 a.m. on Saturday. And not all transactions are going to work like that, but here's the stats that we have found. About 25% of the people you go through a pre-approval process with, a formalized pre-approval process with, and connect to a real estate agent will turn into a funded transaction on an average about 9 months. So this is done over thousands and thousands of transactions. So this is pretty consistent number. It's what you should be aiming for. 25% of people you go through a pre-approval process, connect to a real estate agent, turns into a funded transaction. So that's the process that you want to follow is you want to specialize people, get people pre-approved, right? Connect with an agent, get them shopping. From a sales standpoint, really, how do you manage that? And what's the sales effort? What's great if you're a sales manager in an organization, if your loan officer didn't get a contract in this week, then the question is, how many pre-approvals did you get in this week? So the difference is for a traditional refinance loan officer, it's not about how many just deals you submit the process in. It's going to be how many deals did you submit the process in, and how many deals did you connect to the real estate agent and get pre-approved. So you have two sales gates. So whether or not they got a transaction in that week, the question is, did you get 3 pre-approvals this week, right? So there's always a positive step they can be making. They may not get a contract in, but they can get 3, 4 more people out shopping, which we know will turn into business. So you want to manage both things. Deals coming in, and you want to manage actual pre-approvals taking place. The next thing is, how do you really manage this contact strategy? What's the process of doing this, right? What are your expectations? First and foremost, we all should know, if we don't know this, you get a lead, you got to call immediately, right? So have a system like Accelerate that a lead comes in, it's going to contact the lead in less than 10 seconds through a phone call, text, email. You'll be in front of that customer. So step one, if you're not doing this now, you have to call it. You've got to get in contact immediately. Number 2, get to the pre-approval. That's the next sales gate. I want to get you pre-approved so I can tell you exactly what you can qualify for so you can start shopping and you know exactly what you can buy, right? That's a great service. And sell it as a service, right? Explain to the customer, this is no cost or obligation. This is free. This is easy for you to do. And now you can shop with confidence. You'll know exactly what you can afford so you know if you can buy a house or not. That's the process. Once you get that set up, the next thing is make sure you check in with them once a week. Every week you should be calling those pre-approvals and following up with them. How's it going? Have you found a house? What's the latest? What's going on in your world? Keep that connection. So have a system, like I said, can Accelerate, that can actually manage call strategy, can explain to you and alert your loan officer, hey, here's a pre-approval. It has not been called this week. Make the phone call. So you want a system that constantly connects with them, right? You also want to inform the real estate agents of the pre-approval. Now, this is a great place where you can get additional business. So if you do a great job, if you communicate well, and it's an easy transaction, whatever real estate agent you refer the business to, that's someone that you should be able to ask for business in the future from. And any real estate agent on the other side of the transaction, maybe it's the seller's agent, that's someone else you should be able to get business from as well. So you want to connect and contact both the buyer and seller's agent within this transaction, and you want to consistently ensure them that you are the lender and the loan officer that will help the transaction close. You don't want them ever thinking to themselves, maybe I should refer this to my buddy because I haven't heard anything from a loan officer in a while. I want to make sure this transaction closes. So keep in contact with the realtor, and then just have an automatic follow-up weekly. Let them know the status of the loan that's going on. Are they approved? What's taking place? It's very simple. Weekly communication, contact immediately, right? Put them inside with a loan officer and with the realtor, right? Get them in the door. Then, kind of lastly, a couple things that you guys can take a look at is how do you build these customers? Once you do this transaction, you've spent time, you've given them a great service. How do you build these as customers for life, right? So you can use a system like Accelerate with the in the market alerts where you can actually monitor these people for past. If they pull their credit again for a transaction, if they list their house for sale in the market, the rates improve. Right? Obviously, we're in a rising rate environment, but at some point we'll be in a lower rate environment. So make sure you have a system that once you do all this work and you spent all this time to nurture this lead, to cultivate it, to get them in the door, to turn it to fund the transaction, ensure that you're making the most of your database and you're able to capture all that. So just kind of some recap points. Step number one, consumers are demanding the transactions to change. Consumers will continue to demand lenders to be able to offer loans to them without having to actually go meet someone and shake their hand, right? So as the digital mortgage continues to expand, look at the transaction. I'm a consumer, I'm shopping for a home, right? We already know that 77% of the time consumers ask for a loan before they ask for a real estate agent. So we know the transaction is they want to know what they qualify for. As more and more data and more digital mortgage, being able to verify things, day one certainty comes online and more that takes place, your consumer is going to want to actually get that pre-approval like instantaneously in that transaction. So you're going to have a platform that can manage to that. Because that's what consumers are now doing in this space is they are self-service. They're able to find out what house they want to buy and what they can qualify for. So understand that consumers are demanding this change. So getting into consumer direct purchase is where the market's going. Really now is the time to figure this out. Number two is understand what is valuable. What a lot of us have once thought was not valuable, which was people who didn't have homes or didn't have real estate agents or didn't have contracts. Those are very valuable people. That's a very valuable lead source. Three, you really need to specialize your teams. Again, you may have some loan officers that can sell everything, but for the most part, 80% of our loan officers don't have the ability to sell all these multiple transactions because it's really hard for a loan officer, for anyone to hold in their space, hey, I can work on this file here, I can get paid in 60 days, or I can work on this file here, and I may get paid in a year from now, right? That's a transaction that's difficult. So what I would suggest, specialize. And when you specialize, a way to incentivize your loan officers is obviously pay them a loans fund. But we still have a lot of lenders who give them a spiff every pre-approval, give them $50 or you give them basis points. Anytime they get a loan, that goes through a pre-approval process and gets connected to the real estate agent, give them some type of small bonus so that keeps them engaged and keeps them building that pipeline. And then fourth, have a platform that enables you to do all this, right? So you can manage this transaction, you can manage different workflows. And then lastly, which is where Grant's here and what Grant's gonna be able to get into is you have to have a managed network of real estate agents to make this work. If you don't have a managed network, this won't work. And LendingTree years ago had a managed network and this worked very well with them. They no longer have a managed network. So I understand, and I've seen firsthand what happens when you lose a managed network. Having a network where you can refer business to, and they have good real estate agents that are going to communicate with you, and those real estate agents are not incentivized to take your deal and send it somewhere else because they know that they want to get more business from you and they want to get more business from the network. That's very imperative. Get them pre-approved, connect to a real estate agent, and what you're going to find on average, if you do that correctly and you have the right communication strategy, about 25% of those pre-approvals will turn into funded transactions at about 9 months on average. Some will happen in a month, some will happen in a year and a half. But on average, what we have found is about 9 months, 25% of people you put through a pre-approval process connect to a real estate agent, turn it into a funded transaction. Guys, if you're on this call, my assumption is you're looking at this, you're wanting to do this, and you realize that the writing's on the wall. Our consumers are already asking for it. So this is, very exciting time to get into it. Make sure you have a system that can help you manage all this, right? Manage the communication strategies and workflow. That's obviously very important. Obviously, Accelerate, we have a platform that can help you do that, and we'd love to talk to you about that in the future, so reach out to us. But with that, Grant, why don't you hop in and explain to us how your managed network, how it can help us, because I think that's really powerful and really important in this transaction.
And I just want to kick it off too and just say thank you so much. We're very excited to be here today. And we're also very excited to have done an integration with Accelerate and having the ability to go ahead and work together on a lot of these things that lenders are looking for, but ultimately that customers demand, as you've mentioned. So this is really our value proposition, which is ultimately to go ahead and provide a best-in-class experience for our buyers. I'm going to touch on it in some subsequent slides, but service is at our core. No matter how much technology that comes into play, at the end of the day, in a purchase transaction, people, although they do their research online, it is the largest investment of most people's lives. And what that comes down to is somebody getting in a car and going to visit properties with a real estate agent. And so we take tremendous pride in the efforts and effectiveness that we apply not only to the buyer satisfaction, but ensuring that the communication is streamlined between the loan officer, the realtor, and ultimately the customer as well. And so that's a little bit about us, and I'm going to dive into some detail here on some subsequent slides. And if you're to take a look at a summary basis in understanding exactly what is needed throughout a purchase transaction, there's the service element that I mentioned that is something that is becoming more and more apparent. And I'm just going to quote a recent study as it related to millennial home buyers. And what they found is that even though millennials tend to skew a much higher to a do-it-yourself and technology-oriented process, what they did find is a complete 180 as it relates to millennials and home buying, in that they, in fact, and ultimately prefer to speak with experts, local experts, especially as it relates to real estate, but ultimately the loan officer as well. So technology is a very important component. However, service is something that you certainly cannot overlook, especially when you look at the tail of a purchase transaction, which, as Josh has mentioned, can span 9 months. We've seen it span years as well. The integration into the core lender system is absolutely critical. If there are lender executives on the line and you've been in this business for a while, you'll likely know that simplicity is key. And that's especially with loan officers, and we take the same approach with our realtor base as well. The more that you can go ahead and integrate something into the normal workflow process of somebody's daily routine, typically creates that habit that you're looking to reinforce. And we've found that time and time again, and something that we're, like I mentioned in the beginning, we're extremely excited to be integrated with Accelerate, which does a tremendous focus, an amazing job at being able to have that habit consistent across the loan officers. In terms of reporting and transparency, that's another important point that we take very seriously in providing all of the lenders that we work with that transparency so that they can see where all of their deals are throughout the entire buying journey. You can see where your customers are on hold, right? Because oftentimes customers do go on hold and they restart their searches as well. You can see if they've viewed an open house, so you can even start segmenting, and even in this purchase-driven environment, start being able to take a better swipe at your ability to forecast and determine when your loans are going to likely start locking. We have a managed network, and just like Josh teed up the conversation, we got 32,000 real estate agents. And that's growing right now as well. We have a special investment from Second Century Ventures, which is the National Association of Realtors venture arm. And because of that, we focus pretty heavily and work very closely with the NAR, which is the largest governing body of real estate in the United States. And you know, a big thing with us is, and I know it's been echoing throughout the theme of this presentation, especially some of the slides that Josh has covered. But, you know, it's for real estate agents, when we look at the lens of the real estate agent, they ultimately want to get the deal done, right? They are driving around and sometimes driving a customer around for 9 months looking at homes, right? And we've found that, and we've found and created a lot of loyalty through our patented dynamic scorecard, which essentially is going ahead and rating loan officers, giving loan officers the ability to rate our realtors. We rate our realtors as well. We look at their close rates, ultimately their relationship tie in terms of enabling the customer to help shepherd that loan to a close. And because of that, the more loans that, or the more transactions that our realtors do and get a lot of the positive feedback from the loan officers and additional constituents, their score gets bumped and they get more deals. And so that's really important, and it's a very important process and something that we've found to be very successful. And last but not least, you know, to go ahead and ensure that all of your customers are also giving feedback on your realtors, that's something that we go ahead and we apply for every single closing transaction. We want to know how we did from the customer. We want the loan officer to also tell us how we did as well. And we want the loan officer to tell us how our realtor did. And ultimately that automatically starts adjusting our scorecard. And we continue to do that time and time again. So that's a quick overview of us. And some of the stats and figures here. So we talked about the journey. This data is a little bit old, but it was from RGR Marketing, and they did a study on purchase and the life cycle associated with purchase from what I like to call dirt to dinner table, right? You can call it cradle to grave, but ultimately it's the entire starting process all the way to a funded loan. And what they found was that as it relates to purchase transactions, and again, this is a couple-year-old data now at this point, is that 2 to 4% is typically the band range in which a lender will go ahead and convert a purchase customer, and that is from dirt to dinner table. And, you know, in understanding that, you know that there's a lot of pipeline leakage, something that Home Captain has been able to address significantly, right? Because everyone knows about the flipping of the realtors. That's been going on since the dawn of time. However, there are a number of different things at play here that we find at Home Captain, such as customers, especially in a low inventory environment, they might get discouraged because they've placed 3 offers and you know what, none of them have been accepted. We had a buyer a few months ago in Dallas that put in over 32 offers. His 33rd offer ultimately got accepted. So the inventory is an issue, and if you're a direct-to-consumer lender, right, you might go ahead and you might be pre-qualifying customers for $200,000, $300,000, $150,000, so on and so forth. But if there is tight inventory within any market, it just makes it a little bit harder for the buyer, and sometimes they do go on hold because they get discouraged. And if they do go on hold, how are you going ahead and nurturing them? And that's something that Home Captain goes ahead and ensures that every single customer that is out there gets dispositioned appropriately. If they put their search on hold, that they're consistently followed up with, that the entire milestone journey is ultimately reported back. And what we found is through that process from cradle to grave is that ultimately you're looking at an 8 to 24% pull-through rate from lead to dinner table, right? So if you look at on the high end of the funnel, it's actually lower. It's on the lower end. If you bring it more down into the later stages of the funnel, that's where you start seeing some tremendous impact and opportunity throughout the entire buyer cycle. Other things at Home Captain that we typically see is our average is 74 days. That's taking off any type of 10% of outliers that we'd have on any given month, and something that is ultimately followed up with consistently and ensuring that everything's brought to a close. Next slide, please. So this is just some of a bird's eye view of our system here in terms of being able to go ahead and do our direct handoffs through our realtor network and our platform. Our concierge is usually the first point of contact that the customer will have after a loan officer hits the submit button. And what our concierge does is builds rapport with the customer, does an intake of any of that customer's particulars, what type of loan they're using, what areas, what's important to them, coaching them through any additional questions that they have as it relates to the home search, and using a lot of that information to go ahead and plug that into our system so that we can match them up with the best agent. And when we talk about the best agent, there's a lot of things that we do look at. We take a look at the type of loan that they're using, because we like to pair customers with agents that ultimately have had, say, an FHA loan and FHA experienced customer with us. VA is much different, or a jumbo, right? So if you have a jumbo customer, you likely want that customer to be handled by a bit more of a luxury realtor. So there's a number of different factors and dynamics that we take a look at. And if we go to the next slide here, we can summarize that pretty well here. But the concierge goes ahead and we do the agent matching, we do the reporting, transparency. We're following up with the realtor every single 2 weeks, posting that back into the lender system, and also providing the loan officers with periodic updates as well every single 2 weeks on where their customer is throughout the home buying journey, and liaising with the customer as well. And if we go to the next slide, please. Yep. I have some suspenseful animation in there, so we can just keep going right through that. Yep, there we go. Yep, next slide, please. Yep, okay, so as I mentioned, we are invested in by the National Association of Realtors. Because of that, we're also able to go ahead and partner a little bit more with the realtor community. We've been able to get on stage at the NAR conferences and typically have a booth as well. But screening the realtor is pretty important, because you have about 2.1 licensed real estate agents out there. And everyone typically knows a real estate agent. A lot of people know real estate agents that just got their license just for the heck of it, and haven't ever sold a home. And so what we look at is a lot more of your career-oriented realtors. And a realtor is a member of the National Association of Realtors. They have to abide by a code of conduct, and they have an ethical board as well, which ultimately tracks any of their violations. And it's an important distinction, because a lot of people don't know the difference between a realtor and a real estate agent. A lot of it is that ultimately there's 1.4 million realtors, and then there's over 2 million real estate agents. And we go ahead and we take that a step further, and also taking a look at any type of ethical board complaints, doing a web search, checking with the Better Business Bureau, ensuring that they're licensed in good standing. But then we also get their broker, who's really their, let's call it their legal boss, under agreement with us as well from a supervisory perspective. Next slide, please. All right, so this is something that we're very proud of with Home Captain. Service is really important, and we know that, right? Just even in the lending community, a happy customer is more than likely to either come back to you. They're likely to go ahead and introduce you to some of their friends as well, so that you could get referral business. And so we take our service and the buyer journey incredibly seriously. These are our current, what's called Net Promoter Scores. And if you're not familiar with Net Promoter, it's basically a benchmark of benchmark and score rating of ultimately how customers view you, and their likelihood to go ahead and recommend. So anytime it's in a green or above 0, it's typically positive. And just to give a benchmark, the financial service industry is 35, and that's actually pretty decent. The real estate industry is a negative 45, which isn't so great. So it goes, you know, all the way from positive 100 to negative 100. And so what we take a look at in our entire business is, one, how the loan officer views us at Home Captain, how the realtor views us, and also how the buyer views us, and something that we're incredibly proud of, especially with this long customer journey associated with purchase. Next slide, please. These are just some of the before and after conversion rate impacts. This is a lender that we launched with about a year and a half ago. Needless to say, they're certainly still one of our lenders and pretty happy. The blue bar is the before what they were doing, and then the yellow bar is after what they've been doing. And that's something that we're incredibly proud of. Next slide, please. And this is another way to look at it too. If not by lead source, well, if a lender is, achieving a 4% if they're achieving a lead to fund rate of 4%, this is what we've been able to do for them with their leads from a lead to fund rate that they would send our way. You might ask yourself how lender C is much lower than the rest. Well, it's simply a numerator and denominator game, right? So the longer that you have a funnel that's ultimately being managed, the higher your fund rates go up. Just because, like Josh has mentioned and like everyone knows, there is a long tail cycle associated with purchase. You might have some customers that move really quick, but far and large, you have the customers that ultimately need to be nurtured, followed, communicated with, and they close down the road. And that's something that we like to do, and we love to go ahead and help our lender community with. I think that leaves us with 2 minutes to spare from what my marketing person told me, and anyone who does know me knows I'd probably go like 20 more minutes, but I've been following the timeline. So I just want to thank you, and I'm here.
All right, great. Thanks, Grant. If anyone has any questions, feel free to drop it into the Q&A chat box. It looks like we have one question, and that is, should text messaging be part of our contact strategy? I think this is from Josh's earlier slide.
Yeah. Yes, you should use text message in your contact strategy. What we have found, what we've found is don't use it as your main method as an advertisement strategy, but use it as a contact strategy. So that's very different, right? So I wouldn't use it as a way to blast weekly updates on rates or something, because consumers will quickly turn that off. Text messages get responded to at a much higher frequency than anything else. People read them. So I would use text message in my strategy as a way to communicate, to further the transaction, to update the borrower, to let them know, hey, if you want to text me, how'd your week go? So if they don't respond to the phone call or email, that's another channel you could use. Again, your borrower should set the tone. I know for me, if you want to do business with me, it's much easier to use text messages if you want to do business with me than it is, leaving me messages. So definitely text message is a strategy I'd put in there, but I wouldn't use it as a advertisement strategy where you just blast out text messages to advertise to people, because that's a quick way to turn off your consumer base.
Okay. I have another question. Which of the lead generation services offer the best conversion rate?
Well, I'll take a stab, Grant, and you can say what you want. I mean, that's a tough question, but what I can tell you from what we have found for our lenders, the lead providers that typically have the highest conversion rates are the lead providers that are branded. What do I mean by that? LendingTree is a branded website. People know LendingTree. Zillow is a branded provider. Bankrate is a branded provider. Lower My Bills is a branded provider. Typically, the people who have a branded website, meaning people know, most borrowers know who LendingTree is, know who Zillow is, know who Bankrate is. Those typically tend to offer the highest conversions. Not to say there's not other lead providers that offer higher conversions. It's just as far as a large lead provider that's easily accessible by most lenders, those are the people you want to go start with. And the smaller providers may not have the same conversion or may not have the same volume to provide you as a lender. So I would stick with the people that you would know based off of your research is going to typically be the same lead sources that consumers know as well.
Yeah, I'd agree with you, Josh, entirely. I would say in the, what we found a bit in the purchase market is that for any real estate search portal that also does mortgage, so like the likes of a Zillow or a Trulia, and there's several others as well, what we found was because there are more realtors reaching out to a lead that asks for, to view a home, but also asks to get connected with a mortgage lender. We found a lot of the lenders are more effective in a lead that comes from that solely because the real estate agents that are calling the customer are not as sophisticated, if you will, as a direct-to-consumer lender. So in terms of contact 1 through 10, having specific cadences, having best practices, a lead that clicks on, I want to view this home, I want to view this home, I want to view this home, that already generates potentially, four different realtors that are contacting that customer. And the realtors are a lot less sophisticated in actually getting a hold of the customer, whereas a lender, especially a direct-to-consumer lender, is usually much more effective, if you will, and sophisticated in being able to get the customer on the phone. And so that is something that we've seen just as it relates to the purchase market.
Well, everyone, hey, Grant, I really appreciate you coming on here. I know this is something that we've had a lot of our lenders, a lot of our clients are getting into the space now. It's something that we know the value in it. The market's going this way. Consumers are asking for this. And if you do it correctly, this can be a great revenue stream and can really help your consumer direct shops grow, because this is a growing market. So more and more consumers are willing to do this transaction, buy a house and talk to a real estate loan officer and do it through consumer direct call center. So it's definitely something, if you're not doing it now, you should be looking into it. Obviously, best practices again, is share the right contact strategy, try to specialize where you can, understand the value of your lead source, and work with a home captain and a managed network so you can ensure that you get those conversions back in. And those are some great numbers, Grant, that I saw as far as how much value it is to connect someone with an actual real estate partner. And if you guys have questions, Incelerate's here to help. This is what we kind of pride ourselves on, is we really like to work with our lenders, and we'd be more than happy to actually show you guys how this looks in our platform. You can reach out to us and request a demo, meet with one of our sales teams, ask us questions, and we'd love to see how we can help you guys roll out purchases within your call centers. We thank you for all your time. And again, Jamie said we'll be sending out the recorded webinars to folks. If you have any questions, just feel free to ask, and have a great day.